exit planning strategies. The Dan Rossi Show.
Hello. We're talking about, on our program today, preserving and protecting your business on all fronts. Today, we find, and particularly in our economic situation that we're in, that most business owners are so focused on cutting expenses and minimizing risk and taxes that they've ignored the ultimate goal of creating a company with enough value to leave so that money can support ultimately the lifestyle that they've grown accustomed to over their working years. Now, owners can use cash flow as a tool. They can use it to gauge the financial condition of their companies. They can use it to evaluate the efficiency of any cost-cutting measure they consider and the effectiveness of those cost-cutting measures. With that tool in hand, today we're discussing 4 areas where it might be used to persevere and protect the value of your company. One is reducing expenses. The second is to minimize the risk, and risk is all over in your business. Everywhere you look, there's potential risk. Number 3 is to minimize the current taxes you're paying now. And the 4th part is to ensure proper, legal, and effective business continuity. So let's broaden our scope on reducing business expenses. Now, most owners we talk to, by now, they've taken action to eliminate non-essential expenses in this present economic environment that we're in. Now, not all, and maybe most is a slight exaggeration, but many have taken some steps. These actions or reactions to the uncertain economy typically includes terminating or laying off employees, reviewing company financial information, looking for waste within that, eliminating perks, and or reducing and eliminating employer contributions to 401k plans and other types of key employee golden handcuff plans. Now, if you'd like more information about what other companies are doing to reduce these expenses, please give us a call or send us an email. After we go through this initial round of expense reduction, then there may even be more you can do. As an example, if you have your company's cash flow, cost-cutting, increased gross margins as a result, then the second round of cuts could include benchmarking expenses to industry standards or to see if they're very significantly, if there's a gap there with industry norms. If there is, owners are asking the hard question then, why? Simple question, but a hard question. And these types of things can help to make adjustments in the revenue and thus profitability of the company when you're seeing that revenue dropping, when you're seeing problems due to inventories, materials, the whole chain of supplies coming in, slowing down, all of these things, which leads us to another strategy, which is the subject of employee costs to further scrutinize. Now, for many owners, labor constitutes a huge chunk of their budgets, but for all business owners, having a successful, motivated management team in place is critical to a successful exit, because balancing these two are no easy task. Many owners are conducting employee by employee reviews and are aligning salaries and incentive programs and evaluating whether their current employees are the best ones to meet today's economic challenges. Now, so far we've talked about reducing expenses, and we promised we would talk about risk. Every company faces risk from both inside and outside its doors. Today's economic climate, however, has increased the level of risk that many companies face, from claims of discrimination by laid-off employees, employee fraud, patent infringement, desperate competitors. There's so many things here that can run afoul when all of this economic activity is just tightening and tightening your ability to run and operate your business as you've grown accustomed to in better days. So while many owners see their property and casualty premiums as a great place to cut costs, they forget that their exposure to risk is heightened and by their ability to absorb a claim. So consider meeting with your property and casualty company to examine your deductibles and coverage limit. But this year, ask questions about the strength of your insurer and its loss reduction programs. Smart owners are taking a closer look at the financial condition of their suppliers and their customers, especially if owners have depended on a small number of suppliers, or if suppliers are in a especially hard-hit industry. Owners are diversifying their supplier list. They also are reviewing credit granting policies, updating them as necessary, and most importantly, adhering to them. Now, many owners find themselves on the receiving end of talking about credit lines from their bankers. Others are preempting that call by creating written plans that show how their companies will respond to today's challenges. They're sitting down with their bankers, examining those plans, and then, if necessary, renegotiating the payment term of the existing loans, and so on. These adjustments need to be considered. They take time, but better to approach them from a proactive rather than a reactive and try to defend something when it's already placed on your lap. So, the discussion of risk, we complete it without considering the personal component, which we must do. Do you have a plan to protect your personal assets? And does that plan include ensuring that your family receives full value for your company if you do not live to see that transfer happen during your lifetime? Questions like this are hard placed because most owners just don't know how to deal with that and are so busy taking care of today's needs that they can't find the time to even consider taking more time to do something else that they don't see a great need to do. But we've shared stories in the past on this program. Owner after owner, way more than we would ever dream of, have had that attitude and worked that way, running their companies, believing that'll never happen to me. And yet it does, and it happens. And when it's unplanned for, it's tragic, not just on the owner's family and his or her survivors, but those employees who have dedicated, many of them, their lives to you and to your business. Their families all are hurt by this lack of planning. What about reducing taxes? Every new presidential administration that comes on board brings with it its new tax rules that directly impact your company. Now, under previous administrations, the rules governing the treatment of net operating losses have changed as recently as the Obama administration prior to Trump. These changes also related to built-in gains in conversion from a C to an S corp, if you haven't already done so, take time to talk to your CPA about his or her ideas about how these and other new rules can reduce your personal company's tax liability. They've been on the books for a while now, but it's never too late if you haven't done any planning in these areas. And of course, these tax rules don't just come and go with new administrations coming and going, but they change in midstream. And with the rising debt in America, with the rising liability that is directly associated to that debt, and who shoulders that liability but you and I. So there's planning that's required, not just to reduce current taxes, but to deal with the immediate future and to have the best plans in place that will best defend, protect your asset, your company, and your personal assets. Now, that leads us to business continuity, and business continuity is the last of our 4 steps that we're discussing here in our program today. This last area, protecting your company during tough economic times, is one that many owners just overlook. For whatever the reason, and the reasons usually are, there's such synergy between them and their workforce, their company, that they don't want to do anything to disrupt that synergy, that continuity. But it's your business continuity plan that needs to be in place to protect the very thing that you're not wanting to harm or disrupt. In other words, many owners created their plans when all they could foresee was growth. But if that's your situation, I want to remind you that the disability or departure of your presence will have a devastating effect on your company without a continuity plan in place, a working business continuity plan in place. The departing owner will want his or her buyout at the highest reasonable value, one that remaining shareholders may simply be unable to pay given cash flow constraints, or in this credit market and with credit tightening as we are moving forward, this will become a greater challenge that could disrupt the whole company in this situation and cause it to go bankrupt. Now, unless your business continuity plan specifically states that the value of the company will be its fair market value as determined by an impartial appraisal on the date of the triggering event, then the remaining shareholders will be unfairly harmed and the other unfairly enriched in a situation like this. So pull the business continuity agreement out, take a look at it, review it with advisors, and make sure that it's going to do what it has to do in order for your business to survive and bring you and your family the value it needs to be and needs to bring in that event, should that event occur. So if your sense is there's more you need to do by creating this, shoring up the financial stability of your company, and you just feel inadequate to do it and need help and advice, give us a call and we'll be happy to conference with you. Thank you.